Hi guys, welcome to the next installment on Clear Money Tea about C3.ai. In part 1, we discussed Baker Hughes, customer accounts, and some weird things going on with billing and unbilled practices. So I'd recommend checking that one out, but you don't need it to be able to follow along with this video. Alright, so let's get into it. For part 2, I'm going to go in a little bit deeper on how some of the recent changes impact revenue, as well as I would describe it as exaggerated claims that came up during the most recent earnings call. After watching this video, you can decide if C3.ai is more like Nvidia or Nikola. Consumption pricing, fixed pricing, RPOs, pilots, and agreements. So to really understand all the things that are going on and all the changes that C3 has made, you're going to need to understand this terminology. So I'm going to explain these terms as we go. Let's start with the first one, consumption-based pricing or consumption pricing. C3 is switching to consumption pricing. This is kind of like your electric bill. You pay based on your usage. Some of their existing contracts that C3 has, they're built under fixed pricing. So that's kind of like your rent payment. You get into a contract for the whole year and you know you're going to pay X amount per month. So then the question is, why would C3 make the switch? It seems like a pretty great deal to be on fixed pricing where you get a contracted amount and you know what you're going to get every single month. But with consumption pricing, it varies and you don't know what you're going to get. The benefit for a company like C3 when it comes to consumption pricing is it can be a way to get customers who wouldn't have signed up for a fixed contract, but you can kind of rope them in with a low stakes pay as you use contract. With fixed pricing, they're more able to calculate RPO, which is essentially committed revenue that's non-cancelable. Let's see how C3 describes RPOs in the face of consumption pricing.
As consumption-based go-to-market model continues to pick up, RPO is a less important indicator of future performance. We reported GAAP RPO of $381.4 million, down 20% from last year, which is expected as a result of the transition to consumption-based pricing.
Basically, they're saying, ignore this red flag of RPOs going down because we're switching to a different type of pricing model where revenue isn't as guaranteed as it was before, which, it could be factual. What C3 is saying that, hey, our RPOs are down because now we're booking more consumption-based pricing contracts. However, for this to be true, we would expect two things. One, we would expect that their older contracts, as they renew, that they switch to consumption-based pricing. So think where once they would have had longer term contracts, as they renew, they do consumption pricing and their RPOs are down, but doesn't necessarily mean that they're not going to have a similar rate of revenue. The second thing that we would expect would be for there to be actual bookings of consumption-based revenue contracts. However, let's listen to what they say about this.
Do we have a feel for how many of these pilots have now converted to production? And do we have a gauge for what the VCPU is for those consumption deals once they move into production?
That's a great question. So, Mike, on the first quarter we announced this would have been Q2, which obviously you take 6 months from that, we get towards the end of Q4. So we are very early in that, in the conversions. We are standing by with the model assumptions, i.e. whatever we provided 3 quarters ago, where it is each pilot is expected at 70% likelihood to convert into a follow-on consumption deal. But I would say that the first quarter for consumptions, we really will start seeing more of that this quarter, since it was late in Q2 as we entered into those original pilot arrangements.
Basically, they haven't switched any existing customers over from fixed pricing to consumption pricing.
Nor have they meaningfully converted any of their pilots to consumption pricing deals.
Essentially, they're using consumption pricing as a guise as to why their revenue isn't growing and why RPOs and bookings are down. But what it instead really looks like is happening is customers really aren't renewing as much and they're not booking as much new revenue. And instead, they're getting into a situation where they're working on costly pilots that maybe won't even convert. Now, onto pilots. Basically, along with switching from fixed to consumption pricing, they also standardize a new type of pilot program. Essentially, what it is, it costs $500K, and they expect within 6 months they'll be able to get an application, which is one of their products, live. And during this pilot period, they get this up and running. They demonstrate use case. They can demonstrate the value of the product with the hope and the assumption that the customer will book on and continue to actually utilize this. Essentially, they're expecting a 70% conversion rate on these, which that's a pretty high number. And let's keep in mind for the 500K that the customer is paying, that's a big investment, but it doesn't get into the true cost of what it costs C3.ai. So that's the danger of these. And, C3.ai predicting a 70% conversion rate seems a bit aggressive, especially the reason that they switched from fixed pricing to consumption pricing is to be able to try and cast a wider net into getting more customers in the first place. They did this switch about 2 quarters ago, so it remains to be seen how well these new pilots are going to convert. And keep in mind, while 500K is a big number, it's, what is that in terms of actual employees that are going to be able to work on these applications? It's like 2-4 engineers to get like a huge, big enterprise AI application live within 6 months. That seems like it's not really going to cover the cost of this, which they essentially allude to. All right, so let's listen to what they say about the cost to bring on clients of the size of Accenture or IBM.
When you can have a large-scale enterprise AI application live in production in 6 months for $500,000, I mean, that's nothing, guys. In terms of what it costs to bring in an Accenture or an IBM or somebody to try to bring one of these things live, that's going to be scores of millions of dollars in years.
Now let's look to how big IBM and Accenture are. Those ones in 2022 had revenue of about 60 million. So C3 is saying it's expensive to get these large type of enterprise clients. But now let's look into what the actual breakdown of their account revenue size of the pilots that they booked. So as you can see, they booked 19 pilots for Q4. 7 of those pilots were greater than 100 million in revenue, and another 7 were between 10 to 100 million in revenue. Revenue-wise, we have 7 clients who definitely are a bigger size than IBM, and we have another 7 who are potentially larger or as large as IBM and Accenture. C3.ai is saying it's expensive to do the pilots for these. So basically, we're left with one of 2 conclusions. One, C3.ai is not going to be able to onboard these ones within 6 months, or 2, they can do it, but it's going to be incredibly expensive. Also, I'm going to note too that 3 of their pilots that they signed for Q4 were of their new generative AI offering, which they launched in March of this year. So there's no real estimate too of will they even be able to get this thing live, and 2, how much is it going to cost them? All right, so the final term that I have to go over is agreements. Agreements kind of encompasses a lot of things in the world of C3.ai. Pretty much whenever C3.ai signs a contract with someone, it's an agreement. Is going to encompass agreement signed with Baker Hughes, which is their joint venture buddy that owns millions of shares in C3.ai. It's going to include regular paying customers. So if they sign 43 contracts and some of them were renewals, there's no distinction made to say that it's 43 new contracts. It just says 43 agreements in general. So it's going to include some existing customers as well. It includes pilots, and it includes agreements to sell their products. There isn't really as much of a distinction between what's revenue generating agreements and what's just sort of agreements that could bring on potential revenue. And that's based on my interpretation of how they've listed it. Basically, all in all, we have a very watered down pricing scheme with very broad overarching terms that encompass actual revenue contracts, loss leading pilots, and non-revenue generating agreements, all under one umbrella term of agreements. Fun, isn't it? Now I want to switch up gears a little bit. Let's get into if C3.ai appears to have the tech at least to back up their claims. As I alluded to earlier, C3.ai rolled out generative AI offerings this year, and 3 of the agreements that they closed this quarter were generative AI agreements. While they can't estimate the scope, or Tom, of how big of an impact generative AI could have on their revenue, they do say it's pretty large, but they also say that they don't need it as well.
But that being said, we don't need the generative AI opportunity to be. Generative AI could be 0. Okay, and we're still going to run a cash positive, profitable business in Q4.
First of all, actually, I have to say it's pretty crazy that they're saying that they don't need it based on this line from their earnings call. And as it relates to the full fiscal year 24, we're guiding a range in operating loss due to the potential investments we made for C3 generative AI applications. So I think that's kind of crazy that you're saying that you invested into something and it's going to be the reason why you're having operating losses, but that you also like don't even need it going forward. I don't know, make it make sense. And whatever they figure out and decide on that end, they're still making some pretty bold statements on it. Let's listen to what the CEO Tom has to say about what their generative AI offerings can achieve.
And importantly, it is hallucination free. So if the system doesn't know an answer, it doesn't fabricate it, which is clearly unacceptable for any commercial or serious government application.
Okay, right. Seems pretty cool. Now let's listen to what Sundar Pichai, the CEO of Alphabet, otherwise known as Google, has to say about AI hallucinations.
Error with confidence is called in the industry hallucination. Are you getting a lot of hallucinations?
Yes, which is expected. No one in the field has yet solved the hallucination problems. All models do have this as an issue.
Is it a solvable problem?
It's a matter of intense debate. I think we'll make progress.
All right, did you guys catch that contradiction in there? So we have Tom, CEO of C3.ai, stating that their generative AI offering doesn't hallucinate. It's never going to tell you a wrong answer. And then we have the CEO of Alphabet sounding very hesitant on if it's even possible to have generative AI not hallucinate. I want you guys to sort of keep in mind as well what generative AI does. It uses an algorithm to create new content based on training data. Stating that it doesn't fabricate answers is a pretty bold statement. And I want to give you an example as well of how hard it can be to tackle the AI hallucination problem. All right, so C3.ai does enterprise solutions. And so I want you to imagine your own workplace, your own company. C3.ai is going to build your company in an application. It needs your guidelines, all your rules, your regulations that you guys have in place. So you hand those off to C3.ai, and I want you to think of what could be in your guidelines, particularly medium-sized companies to large companies. There's a lot of guidelines, and the guidelines were created by humans. And essentially what ends up being is that there's contradictory or vague answers within the guidelines. So maybe something wasn't updated, it was updated in one place and it's referenced in another place and it wasn't updated in a second place. Now remember, what C3 is going to build for you is going to take this information, and then when you ask it a question, perhaps it's going to be able to spit out an answer, for example. So how is C3.ai supposed to be the arbiter of truth when there is no truth in the data itself? Exactly right. I don't know either. It's only going to be as good as the data that goes into it. Without even getting into, can C3.ai do a good job of spitting out factual information based on things that there is no discrepancies? But keeping in mind that there is very likely to be discrepancies, how is C3.ai supposed to deal with that and come up with something? Quite honestly, appears to be their first freaking iteration of trying to do this thing. I think it's going to be really interesting to see what they say of how it worked out. I know they have some high profile customers, but remains to be seen how they're going to do it. And I think it's kind of wild that they're seeing that they can do it when fucking OpenAI, it's not something that they've been able to solve. So, but somehow C3.ai has magically been able to solve it and isn't a $1 trillion company at this point. I don't know. All right, guys, so I could honestly make a video in response to like every fucking thing that was said in an earnings call. There are some really interesting things that were said. Overall, generative AI has a lot of interesting applications. I just question on C3.ai's ability to be able to deliver. So essentially back to my first point of whether C3.ai is more like Nikola or Nvidia. Clearly, I think it's more like Nikola. It's just, I don't think that they'll be able to get this done. And I know people might be thinking, well, look who they're working with. And yeah, you're right. C3.ai does have that customer base. They do have those big names that are in there and they've been working with. But, we saw the same shit with Nikola too. Like, didn't they have GM? Look what the fuck happened there. What's going on there? CEO of Nikola just being like an absolute fucking fraud. Look how much the market cap has devalued on Nikola. And it looks like it's going to be delisted. Quite frankly, I don't even know how it's even allowed to be trading at this point. But whatever, this SEC. SEC wants to do with that. It's up to them. Basically, I have no doubt if something goes down with C3.ai that these big names and these big partners, like, I don't think there's like shit's gonna happen to them. I think going into it, a lot of them, for at least on the partnership side, they've already covered themselves. When it comes to investors, when it comes to C3.ai themselves, that is a whole other story. All right, guys, thanks for watching.